The
Yeah.
good news is, perhaps, it's not a demand problem with Apple. Many of us are still clamoring after those Apple devices and services. It's really a supply issue.
Exactly, and obviously, anytime you see a $6 billion hole, coming out of any print, kind of your eyes are popping on your head a little bit. But that is a reality right now with Apple. We've been here before. And end of the day, if there's any company on planet Earth that can kind of get through these kind of supply chain bottlenecks, headwinds, headaches, whatever you want to call them, it is Apple. Margins held up relatively well. And I think that's, when you're dealing with a company like, with Apple and their historically just, flawless execution, this is where they can kind of separate themselves from the pack. So when I see Apple, clearly struggling with all these issues, I'm more concerned lower down the chain, Skyworks, Qorvo, because you do think that eventually Apple's going to squeeze out their suppliers versus eating all the costs themselves. So I think Apple's fine. Stock's down about 3%, still well below the lows we saw, just about 3 weeks ago. So I don't think any alarm bells are ringing quite yet for Apple. But again, I'd be more nervous about some of the supply chain members.
Services obviously is becoming more important for Apple each quarter. That's so much not affected by the supply chain. But of course, there is this litigation that's ongoing. What is the potential drawback impact of that as we wait for the ultimate decision?
Yeah, I mean, it's kind of anyone's guess at the moment. What we do know, the longer term, well, I think the reason why sentiment was pretty neutral into the print. Mutual funds are underweight Apple. Hedge fund community could really almost care less about it at times. Right now, the longer term issue for Apple is the kind of the disruption and threat to their App Store fee and the model structure. We know the ruling on September 10th versus Epic is going to allow kind of mobile developers to implement their own payment structures to kind of circumvent the Apple Pay model, and that's going to be something to keep an eye on moving forward. And right now, it's anyone's guess. But I think both Google and Apple, their ecosystems are going to be under threat, and it's going to be weigh on margins longer term, which is probably why for a name like Apple, which has re-rated significantly since the start of the pandemic, that's why probably the multiple is probably capped until we get more clarity on that situation. Hence, the stock's only up 12, 14% year to date, whereas names like Microsoft's up 45%, Alphabet's up 65%. I think investors have clearly figured that out.
Sure. Well, let's move on to Amazon here. I found so many things interesting about this quarter, not the least of which that Amazon services surpassed retail sales for the first time. We always talk about what a profit engine AWS is for the company, but obviously revenue is growing in importance as well.
Yeah, no, exactly. And I mean, the Amazon print, there's a lot going on here. It's obviously you have the supply chain issues, and you just mentioned AWS. That is really the only bright spot we had all quarter. Revenues accelerated to 39%, well above, not just consensus, but buy-side expectations. So yeah, it's becoming a bigger piece of the pie. I think with Amazon, right now you're seeing a stock that's, barely up year to date right now. I think it's up about 100 to 200 basis points up year to date. You have the supply chain issues. You have kind of the issues of kind of labor shortages, coming out of the pandemic as well. And they're spending a ton of money. And that's kind of what they came out guns a-blazing last night. They're going to spend heavily to get you your packages for the holiday season. And they're also going to spend heavily on content, whether it's for video games or for Prime Video. So I think, the Amazon story is a lot trickier, a lot more hair on it. And, historically, they've gotten a pass for their earnings and margin misses. And looking at the price action, not just right now, I think in 2021, investors are starting to kind of not give them that pass anymore.
Yeah, absolutely. Really good points there. And your point about the extra expenses that they're having to put forward to cover what's going on with labor, of course, the increased cost of shipping and all of those things in order to serve the customer, which has always been first and foremost for Amazon. And Andy Jassy just said, look, we're going to spend several $1 billion. This, though, to me, doesn't seem necessarily like it's a one-quarter thing. I mean, how long do you anticipate these extra expenses being in the billions of dollars?
Yeah, I mean, it feels like it could continue to linger. I mean, obviously, I think the messaging so far of earnings season, I think it's been more optimistic, especially from the automakers in terms of supply chain challenges. We are getting signs of improvement. Hopefully, as ports start to open up slowly but surely, COVID restrictions maybe ease a little bit in kind of the manufacturing hubs of Southeast Asia. But it's really anyone's guess. I mean, at least the tone has kind of, it feels like we've troughed in terms of negativity. But again, there's a lot going on here with Amazon and Jassy. He's got a rough start. His last his maiden print was back on July 30th rather. Stock fell 7.5%. It's down about 5% right now. So I think people are going to start to question a little bit, maybe execution and trying to get the ship back, on the right course. But I think Amazon's probably dead money to some degree until investors become more warm up to the story a little bit in terms of earnings and margins and what it looks like in the kind of quarters ahead. But as your question pertains, I don't think anyone really has a clear-cut picture of where Amazon, maybe starts to trough and kind of start to bottom out. It seems like a path of least resistance is lower, at least in the near term.
Right.